Most traders don't lose money because their strategy is bad. They lose money after they make profit. They take one more trade, then one more, and suddenly the green day turns red. In this video, you will learn when to stop trading after profit, why overtrading destroys beginners, and how professional traders protect their gains. If you are new to trading, this lesson alone can save you months or even years of losses. The real problem after profit. When you make profit, your brain releases dopamine. You feel confident, you feel smart, you feel unstoppable. That's the most dangerous moment in trading, because you stop following rules and start following emotions. Professional traders know this, beginners ignore it. Why beginners give back profits? There are three main reasons. First, revenge against the market. You think, today is my day, I must make more. Second, fear of missing out. You see price moving and feel, if I don't enter now, I'll miss the opportunity. Third, overconfidence. One winning trade makes you believe every next trade will also win. This mindset destroys accounts. The professional rule: one good trade is enough. Many successful traders stop trading after one high-quality setup, reaching a daily profit target, or two consecutive winning trades. They understand one truth: you don't get paid for trading more, you get paid for trading better. Daily profit target, the safety lock. Every trader needs a daily profit target. It doesn't have to be big, even 1% is enough. Once that target is hit, you stop trading, no matter how good the market looks. This rule protects you from giving profits back, emotional decisions, and mental exhaustion. Discipline creates consistency. Overtrading, the silent account killer. Overtrading doesn't feel dangerous, it feels exciting, but it slowly destroys your focus, your confidence, and your capital. One bad trade after profit can erase 3 good trades, hours of patience, weeks of progress. That's why stopping is a skill. The mental shift you must make. You must stop asking, how much more can I make today? And start asking, how well did I follow my rules? Success in trading is not measured by money, it's measured by discipline. Money is the byproduct. What successful traders do after profit? After hitting their target, they close the trading platform, review their trades, write notes in a journal, and walk away from the screen. They protect their mindset more than their money. Final lesson. Trading is not about being right all the time. It's about surviving long enough to let probabilities work. If you can learn when to stop, you are already ahead of most traders. Remember, the market will always be there tomorrow. Your capital may not be. Call to action. If you want more videos on trading psychology, risk management, and real trading discipline, subscribe to Profit Logic Global. Trade with logic, not emotion. See you in the next video.